Let's take a look at some legacy charts for Brave New Coin. As things get weirder and weirder across the globe with corona variants potentially fueling some fear here as the VIX is rising once again, which immediately means we're not in a bullish risk-on environment necessarily. That's the single most interesting thing besides the DXY rising, and the NASDAQ correlation with Bitcoin on the 30-week rolling is now 0. SPX 30-week rolling also approaching 0. Gold still negative, Dixie still positive. These correlations, none of these necessarily make any sense whatsoever, as we're still dripping day over day in BTC land. So to bare minimum, I think we need VIX to decline, which I don't necessarily see happening. If the corona variants continue to take hold, at least in public perception, and if the DXY continues its very likely path to 96, 97, 98, crypto is in for a world of hurt. Almost certainly that would mean a decline to 20k for BTC, sub 1k I'd imagine for ETH. Things will probably get ugly. I don't think we'll have a March 2020 repeat, but it's not going to be pretty. So these correlations are very strange. You can see that even in early 2020, we went deeply negatively correlated with stocks. So maybe we need to refresh that negative correlation again. I don't know. The analysis is all over the place. Because if we're risk off, we should be correlated with gold, which we're not. If we're risk on, we should be correlated with this stuff, which we're not. And we're correlated with Dixie, which makes absolutely no sense whatsoever. But if we still are correlated and Dixie keeps rising, maybe I'm just flat out wrong about all that stuff. Here's gold, which is just in a no man's land of chop. If Corona 2.0 takes over, similar to this March spike down, you'd see a continued rise in gold as hedging fears take over, VIX explosion, that sort of thing. Don't think we're quite there yet, at least the chart doesn't say so. One thing I don't look at in these videos is oil, but that's continued to moon with several explosions in oil fields across the world over the past couple of weeks. Some strange stuff there as well. Here's silver, which needs to hold this pennant in the near term. It's getting closer and closer to end time breakout stage. This is a metal, it's weekly, it's going to take forever for this thing to move. If it does, the expectation for me is still higher highs, but needs to turn that corner sooner rather than later, coming off of that Why Coffee and markup. NASDAQ had its first weekly spinning top, I guess, in a while, or at least likely closed that way. Obviously, it's early. It's got another day on it, but that's typically one of the first signs of problematic conditions. You can see another one right here in 2018. Generally just means buyers and sellers are coming to an equilibrium and it's momentumless, and you don't want to necessarily see that at the top like you're seeing here. You've had like 9 straight weeks of up, with the 10th week being the spinning top, so not too much confidence going into week 11 here on this string of crazy candles. It's still overbought based on cloud still way above the Tenkin, way above the Kijun. These TK lines are coming closer and closer together. The Kijun has gotten pulled up kicking and screaming as prices moved up. So the first reversal opportunity is when these are flat, because that says market is now momentumless. The second opportunity will come when you eventually get something like this, or just a flat out cross at the top. If you get a cross at the top, that's a definite exit signal, but that's probably not going to happen for 6 more weeks, at least, something like that. If this just goes sideways, still it's not screaming buy for me in a vacuum. If I see this anywhere, same thing with SPX, which is even further away from Tenkin and Kijun, still has this lower time frame bear div in April. I just don't know who's looking at this stuff getting excited about jumping into this. It's just way too overbought since March 2020, and it would be quite poetic if we dumpster dive again based on Corona headlines. Here's Coinbase chart. It broke up on that wedge last week and kind of went nowhere since then. Still not a lot of chart history, not a lot of data. Looking more neutral and less bearish, but there's no anything here as far as trades are concerned. It's important to look at these every once in a while. CoinSquare, MSTR, Tesla, just because they have really big corporate Bitcoin treasuries. Square is just more sideways. momentumless. Doesn't look as weak as it did a couple weeks ago, but it's still kind of stuck in this RSI downtrend. But it looks fine to me. Overall, MSTR broke up on a bear div, sideways flat in this VPVR range. Another one that's basically 80% correlated with BTC. So if this pops or drops before BTC does, it can be acting as a leading indicator. That's important to keep in mind. GME still grinding lower, but still looks okay in the grand scheme of things. All this stuff, GME, AMC, this is an I'm loving it, M double top for sure, Adam and Eve. I would not expect bullish continuation off of that at this point in time. For the love of God, this isn't investment advice, but if you're holding this from some low, please sell it. That's just my opinion. Doge as well, dipping. So all of this stuff is probably going to move together if it's on Robinhood, GME. The GME and the Doge chart is like scary similar in this regard. Just dripping, 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 lower, lower, lower. And Doge miners are still making 3 million a day. They're making 3 times what they make on LTC. And as a script miner, collectively, they're making 4 million a day, which is just absolutely insane. They're still making more than they've ever made prior to 2021. And all that represents overhead sell side supply that needs to be absorbed. You can think of it as 3 million a day, at least, needs to be bought, assuming all of this new coin is sold. Big assumption, but that's what I'd be doing if I was mining Doge, selling it as quickly as humanly possible at these prices. The GBTC premium is still not a premium, it's a discount at negative 11%, ETH negative 3.8. These numbers aren't really going to tell you much. I think the direction of them is more important than what they actually are. So if they're increasing or decreasing, it's a nice little sentiment gauge for institutional retail or institutional facing retail who trades this stuff. People who would rather trade this than spot ETH, spot BTC, for example. QCP Capital is a good Twitter follow, but he goes through this long Twitter thread talking about the grayscale unlocks and the 6-month vesting and all that other stuff, and how it's not as bearish as people say it is necessarily, and the market's kind of hanging on to this because there's nothing else going on that's exciting. And the same was true on the way up. I mean, everybody was looking at grayscale BTC being absorbed, so it's rational to look at it on the way down as well. I don't think he's quite on the market in that regard, but it's a good thread. He breaks it all down. Highly recommend checking that out. Lastly, Tesla also just looks weak, looks ready to break down. You could argue maybe Adam and Eve stuff over and over again here. There was a mini Adam and Eve here, a mini one here, a mini macro something here, but in general, this looks like a descending triangle to me. Tesla hasn't had their earnings report yet for Q2, but I believe that's when they would reveal whether or not they've sold BTC. Elon says no, but dependent on China stuff and profit and blah, 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 there's some business reasons why they may have to sell it. So I guess we'll see. The truth will come out when we get that report. And this company, Me2, also reported 17 million in losses but in Bitcoin, but 14.7 million in gains in Ether. So that's an interesting story. That'll definitely make the rounds and potentially shift sentiment away from BTC and to Ethereum for people who don't necessarily know better. But people on company boards and whoever else looking at this headline that's gonna perk some eyebrows up, certainly. And another interesting legacy thing that hit today was Circle going public for 4.5 billion, which is crazy to think where they've come from and where they are now with the Poloniex stuff. The OTC desk dissolution. They had a retail app at one point, and now they're sort of all in on USDC, and that's really worked out well for them. Lastly, I'll just mention the ETH-BTC and DeFi portfolios. I trade for Techemy Capital on Enzyme.finance non-custodial portfolio management tool, where you can send ETH-USDC or just watch what I'm doing into the smart contract, and it allows me to use those funds in a copy trading type of manner. You can see performance allocations, AUM, all the trades I make. You can see all of the activity in and out of Aave, Compound, Paraswap, Yearn, Enzymes adding more and more yield type of stuff. And one word of caution with Enzyme as far as the numbers you see, the pricing, This one I caught today, but this is not an accurate price for WBTC, so I don't know what their Oracle issue is. I let them know. And things like Aave, USDC, you know, if the fund is mostly in Aave or has a substantial amount in USDC like this, and this fluctuates between 103 and 98, that's going to change this P&L a lot. One thing you can look at instead of Enzyme is Xerion, which will break it down a little bit differently, but potentially the Oracle issues won't be there. You know, both of them can have Oracle issues. You can see wrapped BTC being reported correctly here. So that's just something to keep in mind. It shouldn't always affect P&L or the share price. So it looks like the share price is still correct-ish, despite the Oracle. There, it looks like it fixed itself now. But even that's a little off. Anyway, that's all for this one. Like, dislike, comment, share, subscribe, and happy trading.